Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, May 14th, 2019, and we are now in the final hour of today's trading session. This is the hour where I like to take the majority of my trades because I like the clarity of the closing price of the day, which is the price that I feel is the strongest, most valid price of the day. That's why they call the closing price or the last hour of the market the lie detector of the lie detector of the day session. So, how's everybody doing today? We are having an up day, which is nice after yesterday's barrage of sellers. So what we're going to do today, first thing we're going to do, we're going to run the U.S. government required disclaimer. We're going to look at my current positions, why I purchased them, when I purchased them, and how we're going to manage them going forward. Then we're going to take a look at my watch list. We're going to go through each chart of my watch list and see if there's anything interesting to look at as a possible trade at the end of the day. And then if anyone has questions after the market closes, very happy to answer those questions. So if something comes to mind, just go ahead, write it down, and then you can ask me at the end of the day, and I'll see if I can answer them for you. So. Okay, so let's go ahead and before we get started with analyzing the markets, let's go ahead real quick and just run the U.S. government required disclaimer. It's 40 seconds. I will be right back.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, great. We got that out of the way. Let's look quickly before we take a look at my positions. Let's take a look and see what's going on with the market in general. The Dow Jones Industrial did have a nice bounce today. It gapped up and it's continued to move. Although this looks very promising, let's keep in mind yesterday we closed up here. This was the low of the move. I'm sorry, the day before yesterday it closed up here. This was the low of yesterday's move. You see how we've moved into about halfway of this move. So we're not out of the woods yet. I mean, when you have a nice counter rally, it's expected that you would go back into the halfway mark from the previous day to the low of yesterday. So, you know, right in here, it seems like we're having some issues, and technically that's kind of where you would expect them to happen. Tues. You know, we had that huge day down, and again, we've rallied nicely. It's a big day, relatively speaking, but we haven't even tested the halfway mark from Friday's high to yesterday's low, and we have this 50-day moving average above us as well. The SPY, you know, big day up, right? But we have this 50-day above us, and we're still at the halfway mark between Friday's close and yesterday's low. So let's keep that in mind and not get too overzealous in thinking that we're making a bottom. We certainly could. I don't know, obviously, but let's be cautious as always. All right, so let's take a look at my current positions. Back to the Dow. I did buy the Dow diamonds yesterday, and the reason I bought it is because during the day we did go under 30 RSI, but we were able to recover it and close back above, which is positive. So I did hit three profit targets today. It's about close to 40% of the trade I have taken off and locked in, which I'm certainly grateful for that, because like I just said, just because we're having this rally here does not mean that we are now in an uptrend or that's the bottom. I mean, technically we're still in a downtrend, and this very likely could just be a rally, a counter rally in a downtrend. So I'm really glad that I've taken off the profit targets that I have. Going forward, how are we going to manage this trade? Well, until it moves up higher, my initial stop will still be will now become the 200-day moving average. So if I have a Hey, David Gordon Russell, how you doing? Thanks for coming today or participating. I appreciate it. It's good to see you. Actually, technically, I bought this with a close over 30. So initially, my stop loss was a close below 30. Now that we've moved up above the 200, I'm going to now move up my stop to a close below the 200. And if it keeps on going higher, then we'll use some other type of trailing mechanism, maybe the 5-day, so forth. So anyway, really glad to have this move up today. Close to 40% of the position I have scaled out of, which I'm fine with, because like I said, this could very well be just a bounce in a downtrend. So gold, we did buy gold here on the 10th of May when we had the 5 EMA cross above the 20 EMA. That is a valid long-term tested signal. We also, at the same time, took out this high here, which is a fractal, two lower highs to the left, two lower highs to the right. We did have a nice gap up yesterday. Can't remember exactly what percentage I got out of here. I think close to 45%, somewhere in there. Oh, it was that's right, about 48% I got out of. So, there's two different ways you can approach this now. I bought this based upon a 520 cross, meaning that if you were just to trade this mechanically, you would buy this and you would hold this until the 5 cross back below the 20-day moving average. So, if I were discretionarily trading this right now, I would probably exit today with a close below the previous day's low, and also the rejection of the third ATR channel and the 100-day moving average. But, I think with this particular trade, because I'm out of so much of it, almost 50% of this, I think this is going to be a good example for all of us in the days going forward to show you what it's like to actually take a mechanical trading system. So as this continues to go up, I will continue to scale out, but I will hold this until the 5 crosses back below the 20, just to give you an example of what a mechanical crossover system looks like. So hope that makes sense. So I will be keeping gold. I will phase out as it moves up, but if the 20 crosses back below the the 5 crosses back below the 20, I will be getting out. If I had not scaled out of nearly 50% of the trade, I would probably get out here, but because I was able to scale out and have less of the position, it makes it easier to risk some open profits for some larger gains. So hope that makes sense. All right. Hey, everybody, just give me 1 second. Okay, sorry about that. I have a visiting dog today at my house. Her name is Piper, and she is... Let's take a look. There she is. Isn't she a cute little one? She's helping me trade today. So, okay, let's get back to the charts. Okay. All right, so that's gold. Intel. Intel, I took a very rare intraday trade today. I did not base it on the daily, although I do like that the daily has stopped moving down and we're moving sidewards. I did take this for a couple reasons, just to give you an example of a day trade. But here we had a low, we rallied, we came back down, we made a higher low, reversed back up, took out this fractal. The fractal again is 2 lower highs to the left, 2 lower highs to the right, and it was a V2. This bar washed out the previous bar, close back above the first day. So my entry point, you can see, is right there, 45.40. So I will be exiting this at the end of the day. This is just a day trade. So had it closed under the 10-day moving average, this pink line here, I would have gotten out if this bar would have closed, but it tested it, reversed back up. So we'll see where that ends up at the end of the day. All right, Nike. So I did purchase Nike back here on the 9th of May when we went below the previous day's low, and then reversed back up, creating a V1. This bar goes lower than this bar, closes above the previous day's close, and then we also rejected the 100 day. So those were two confirmations that it did not want to go down under here. The next day I got out of 2 profit targets, about 20%. Yesterday, now my initial stop was the 100-day moving average, but yesterday we were down below it intraday, but I base my exits on the end of the day because I feel like that is the most valid price. And right at the end of the day, it was able to close back up over my initial stop, which was the 100-day. So luckily, because today we had a nice day, as you can see. So I did get out of about 20% today with these 2 profit targets. So you can see I'm out of about 40% of the trade here, here, and here, here. So moving forward, how am I going to manage this trade? A close below the 100-day moving average would be my trailing stop. So now to the upside, if we hit the 50 RSI and rejected the 50 RSI, that would also be another signal for me to exit the trade. But it's a nice feeling to be out of 40% of this trade. And as we get closer to that 50, I'll scale out more. But you know, if it gets to the 50 and rejects it, I will be getting out, or if it closes back below the 100-day moving average. Okay, here we are, SPY. I did buy SPY yesterday at the close, and as many of you know, the reason I do that, and I'll just show you real quick in case we have new people here that don't know what this is about. But basically, since 1993, if you would have bought the SPY on the open and sold it on the close, so you buy in the morning, sell in the afternoon, you actually, this is from 1993, you've actually been down 5.2%. And we know the market has certainly gone up since 1993. So how do you explain that? Well, you explain it because if you did the opposite and you bought on the close and sold in the morning, you'd have returned 568%, meaning that more than all performance came in after hours trading. So this is a long-term system. It has its ups and downs, but you can see the green line. This is the buy in the afternoon, sell in the morning. The red line is the buy in the morning, sell in the afternoon. And you can see over time, the buy in the afternoon, sell in the morning has far exceeded the opposite of buying in the morning, selling in the afternoon. It does have drawdowns. You can see it has substantial drawdowns. That's why it's important to always use correct position sizing, use a small position size, and you know, look at the long term on this. It doesn't mean that, you know, within a month's time you might lose money. It might lose money over 2 months, but over the years you can see it certainly has made money. And does it mean that it's going to make money in the future? No, it does not. It does not. But the past, I'd rather base something on good performance in the past than on nothing. So, you know, the last few days we have had a tough, or the last couple weeks, it seems like, you know, we've had quite a drawdown. I've taken some big lumps overnight. Finally today we did get one to go our way. You can see I bought it here. I sold first thing in the morning. So all right, I will be buying this again at the end of the day. All right, UNG. All right, so UNG did hit 2 more profit targets today. I did buy this back on the 10th of May. Why did I buy it? Well, I bought it because a couple reasons. It took out this fractal, 2 lower highs to the left, 2 lower highs to the right. Took out that fractal, closed back above the 20-day moving average. MACD was positive. RSI was over 50, which is positive. So anyway, we hit 1 profit target yesterday. We hit 2 today. So I'm out of about 30% now of this trade. It's been profitable. The question here is how am I going to manage this trade going forward? Most likely, since now we're starting to extend up above our entry signal, possibly a close below the previous day's low. So tomorrow, if we close below this low, that might be an option, or also a close below the 5-day moving average. I don't want to let this trade turn into a loss as well. It's important when you have trades, they start going your way, you start phasing out. Then when it gets back to your profit target, your entry, that's a good time to just let it go as well. So very happy with this trades. Moving forward to the upside, where would I get out? Well, we're at a 53.81 RSI. If it gets up into the 70 range and can't go higher than the 70 range, or it does test it intraday and then close back below, I would also use that as an entry signal. So, you have entry signals if it goes against you to the downside. You have exit signals if it goes against you to the downside. You also have exit signals if it gets extended your way and then can't go any higher. So, it's important to play offense and defense, both to the upside and to the downside. Hey, Juan Pablo, first time watching this live. Hey, I hope you're doing well too. Thank you, Juan. Hey, I hope you enjoy it. If you have any questions after the market closes, please let me know. Okay, so those are our positions. Diamond, we phased out 3. Gold, this is the moving average crossover. We'll wait for the 5 to close back below the 20. Intel is a day trade for me with a close back below the 10. Nike, nice day for us here. SPY, we'll be buying that at the end of the day. And UNG, 2 profit targets today as well. So it's a nice green day. Thankful for that after yesterday. But let's keep in mind, yesterday was a big down day on large volume. It was massive. So just because we have a little bounce today does not mean, it's all butterflies and rainbows going forward. Technically, this is almost exactly where I would have expected it to stop. All right, so moving forward, let's go ahead and take a look and see if there are any possible entry signals for us today. Apple. Nice move back up today. I wouldn't buy it here. I honestly would need this to close above the 200-day moving average at the very least for me to get interested. Again, big down day yesterday. Had a little bit of a bounce today. Uh-oh. Did I lose my internet connection? Looks like I lost the internet connection, folks. At least on my charts, looks like we're still up. Well, that's never good. Can everyone hear me? Hello? All right, I'm going to shut down my charts and reopen them back up. I don't know if everyone can hear me though. Okay, well, for some reason my live stream, or not my live stream, but my charting software for some reason went down. I just I just closed it and see if we'll get it back up. Just give me a second. Sorry about this. Let's see if we can get this back up. Boy, I sure hope so. Well, this will be tough to work with if I don't have charts. All right, let's see here. Boy, for some reason this is not. I apologize, everyone. Um, I have no idea why this is. Oh, did we get it? Maybe. Ah, geez, this is embarrassing. Let me take a look real quick. Oh boy. All right, I'm gonna try one more time. And if I can't get this to go up, I'm really not sure what to do. You can see right up here it's trying to connect to real-time streaming. Maybe there's a problem on Trade Navigator's end. I've never had this. I've used this software for 20 years. Well, boy, that's a bummer because there was a bunch of things I really wanted to show you today too as well. Boy. One of them mainly was DDM, and this is now showing yesterday's close instead of today's close. What I did want to well, I guess I can show you this as well, but today it is above the 200-day moving average, which is a legitimate buy signal. And let me show you the back test while we see if we can work this out. But you know, if we look at the back test on the DDM, this is DDM is the double leveraged Dow. That means it's the leveraged. But if you would have bought the DDM with the close over the 200-day, you can see since 2000 it would have returned 305%. Where YS buy and hold was only 254%, and it only the drawdown was 28% compared to buy and hold 81.7. So here you have a lower return with a much higher drawdown, where using the DDM above and below the 200-day is a higher return and a lower drawdown. So, you know, that is certainly the way to go. Now, Because it's a double leveraged, I would only take a 1/2% because I don't want that double leverage. I just like the results that the DDM has above and below the 200-day moving average. So let me take a look real quick. I have no idea what's going on with my charts here. Boy, I apologize, everybody. I'm going to try it one more day. So I already wrote the line, put the line from earlier, 45.17. If we look right now and see what DDM is, it's 45.25. So I guess I'm going to have to trade this way today, unfortunately. What else was I looking at? Let's see. Boy, this is going to be tough. NVIDIA. You know, let me see if I can do things this way. No, that's not going to work as well. Well, shoot. I'll close this down, see if we can do it one more time. Dang, I had so many things to show you today, everyone. This is a bummer. So at the very least, I will be watching the DDM, but my goodness. Let's see if I can open this up one more time and get it to work. For some reason, I just can't get that real time to go. Well, yeah, there's some kind of problem with the data stream today. Gosh darn. Well, yeah, and I can't drag this chart over either. Man, what a bummer. I think Yeah, over 20 years I've never had this happen. And then today it happens. I guess the first time for everything, right? Yeah. All right. Well, I guess really the only thing I can do is watch DDM and know that a close over 45.17 is going to be my signal. And right now we're at 45.17. So, boy, that gives us a lot of dead airtime. Does anyone have any questions? A little time filler, anything I could answer right now until maybe this comes up for us? So DDM, if it were actually showing the chart, is, that would be our buy signal above or below the 745.17. Google, I was looking to buy Google over 1147.11, which is the 200-day moving average. So any close above 1147.11 would be my entry signal, but would have to close above there. So I'll have to watch this now at the end of the day, at the very least. Currently, Google is 1128.04, so it does not look anywhere close to triggering that. Let's take a look.
Order filled.
Gosh, I really apologize, folks. I had so many good things that I had set up to show you, and this is not helping. What is your trigger for getting out of the 5 MA closing over the 20 MA? So, well, technically, David, it's the 5 EMA closing over the 20 EMA. So EMA, which is the exponential moving average, not the MA, which is the regular moving average. So my trigger for getting out of that would be the 5-day EMA closing back under the 20-day EMA. For example, on gold here, do you see how the 5, this little line here, cross back over the 20-day EMA? So the trigger would be the 5 closing back below the 20-day EMA. The thing with these moving average crossovers, it gives you a lot of it doesn't give you a lot of trades, because once you're in a trade and you just wait for the cross back under signal. Let me show you quickly. Let me show you on the so here's the UGL. We're going to use the 520 EMA. Oh, sorry. That's we have to use GLD. No. So you can see that it outperformed buy and hold, and the drawdown was less than buy and hold. So, you enter when the 5 crosses over the 20, you exit when it crosses back below. And you can see, these moving average crossover systems, they're designed to have small losses. You can see 5, 2, 0.94, 7, 1, 3. So, small losses, but then you do get some real big wins in there. by mechanically holding them and trading them. And that's the key with trading, is you have to have large wins and small losses. And this particular system, it only wins 30% of the time. It actually loses close to 70% of the time. The wins are almost 4-to-1 in the favor of the wins compared to the losses. And that's the key with profitable trading. You have to have large wins, small losses, cut your losses when you're long, be patient when things are going your way. So let's see, do you have any tested intraday strategies? The strategies, Michael, that I use on the daily also work on the intraday. It's just that, intraday is a little tougher in my opinion, because, you're fighting for pennies during the day instead of dollars when you're in a trade 3, 4, 5, 6 days. So the bid ask spread takes a bite out of you, and you don't have as large of moves. But moving average crosses during the day, all the different types of strategies that I use on the dailies, you can also use during the day. I have a video on my YouTube channel. It's called My 7 Different Types of Trade Setups. And if you haven't watched that, I would really recommend it, because I go through each type of trade that I do and show a couple of examples of it. I could show you that trade on Intel, but my charts aren't up, unfortunately. Let me try this again. But V1, V2 entries, that works intraday, bounces off moving averages, moving average crossover signals, all the things that I do when I teach. Do you mainly trade big caps? Yes, Michael, I do. I mainly trade big caps because, one, I like big, strong companies. The bid-ask spread is going to be very small. There might be a penny or two between. When you get into smaller stocks, they have higher spreads and they're not as liquid. So yes, I do prefer large cap stocks. So many good broadcasts so far. A minor glitch can be expected. Yeah, I know, right, Johnny? I don't know why. Okay. Do you know any strategies that have 50-55% win rate? Yeah, I mean, I actually, David, I mean, my average winning percentage is about 70%. And that's because I phase out, so forth and so on. But there are winning strategies that only win 30%. So 50-55%. Yeah, I mean, a lot of the ones that I teach here would be in that range. But one thing, David, the most important thing is not your win rate, but it's how much you actually make compared to how much you lose. I mean, you can have a 70% win rate, but actually still lose money. So let me check real quick. Let me check on the market here and see what's happening. My goodness. Yeah, I feel totally lost right now. All right, I am going to focus on the DDM because this is what this was what I was focusing on. 4517. Error opening real-time stream, reloading data. Okay, so 4517 is where I'm going to be looking at DDM for a purchase. Right now it's 4507, so that means that at this point I would not be buying it. What else did I check here? Boeing was had gone from under 30 over 30, but I'm not going to touch that now because I can't see what's going on. DDM, Google was going to be a close over the 200-day moving average. That's certain. Let's see, that was at 1147.11, and Google right now is 126. So it looks like the market's turning a little bit for sure. I did have on NVIDIA a close back over 161.20. And that was because we went back over the, I mean, if you could see today's action, a close back over the 100-day moving average. With today's bars, 161.20. So right now it's at 162.37. So that might be a possibility. It's under the 200-day moving average, so I would be buying a 1/2 position, because under the 200-day, I always like to buy only a half. Let's take a look here. Yep. All right. So that does give me enough to base the trade. So DDM. Tues. AT&T did look kind of interesting too, and Tesla did look interesting also. Tesla at 231. Yeah. What I want to show you on Tesla here is, you see we have this bottom, we have this rally. Now we go lower than the previous low. Well, today we're back up above this line. So we went down into a new range to the downside, and today we rejected it and went back up over this line. This line here is 231. 231.13, and currently we're at 232.49. So 231.13. All right. Okay. 397. 635. 77 and 124. All right. So yeah, this is a good example of a double bottom with a divergence. And you know, when I studied under Dr. Alexander Elder, this is his favorite setup. When you have a low, you have a rally, you have a lower low, gets rejected, moves back up into the previous range, while at the same time the MACD bars have a divergence. At this low, we have low bars here. You can see this particular one here, the bars are very shallow compared to the previous. That means that the momentum of this move is not as strong as this move. And so now we've moved back up into the prior range. So if Tesla does close above 231.13, I will be buying it. And right now it's at 232.51. So depending on where we close here, I will be buying that. I will also be buying a half a position again, because it is under the 200-day. All right. Do you have a link to the 7 strategies? Yeah, let me grab you a link real quick. All right. Here you go, David. Yeah, I think you'll enjoy this video. Like I said, I go through all of the different setups that I use and, you know, explain, show examples. But, you know, the market moves around a lot, and sometimes it's high and you have signals when it goes up high. Sometimes you have signals when it goes down. So you have to have an approach. You have to have some kind of method to use regardless of the market's going up, it's going sideways, it's going down. And, I've studied, my three mentors are Dr. Alexander Elder, Stephen Burns, and Carrie Lavorne. And what I learned from each one of them, very different from each other, but each one really good because it gives me tools to use regardless of whether we're going up, sideways, down. So yeah, I hope you'll like that video. I think you'll get a lot out of it. Well, I'm going to try Trade Navigator again and see what's going on with this data issue. Let's see. Boy, I don't think I've ever traded so blindly in over 20 years than today. And then throw on doing a live stream on top for extra points for difficulty. All right, so we're going to see if that one actually works. Okay, so Tesla, I am going to be buying a 1/2 position based upon this double bottom with the divergence over 231.13, and currently it is at 232.20, so that will be fine. We have DDM. Let's see. Yep, still have that error. Okay, so DDM is a close over 45.17. It is under 45.17 right now. It's 45.02. And then NVIDIA. My buy on the video was 161.20. It is right now 162.31. We do have earnings coming up on the 16th, so we have to know going into this that we would have to get out. I would have to get out of this before earnings are announced, because I never hold through earnings. I think any of you that listen to the show each day know that there's just too many surprises. And it's literally just gambling. So if you're going to gamble into earnings, you might as well go to Las Vegas and get a comped room and a show and all that kind of stuff, right? And I will be buying the SPY at the end of the day as well. So quickly, NVIDIA over 161.20. DDM over 45.17, and Tesla over 231.13. Boy, everybody, I really apologize for this. This is really a bummer. I had a lot of good things to show you today and some principles that I wanted to show you. And then this just doesn't, then the charts don't work. At the very least, if they showed today's, that would be fine, but it reverts back to yesterday's. So at the very least, I do know that I'm going to be buying the SPY because that's a regular trade that I make each day. And then I also know that the DDM over 45.17 is a great back-tested trade as well. Doesn't mean that just because it's closing back above the 200 on the DDM that it's going to go our way. Certainly doesn't, but it gives us a good back-tested approach that shows that the wins compared to the losses are greater if held above the 20-day moving, the 200-day moving average. All right. Oh, thanks, David. Yeah, this is crazy. I mean, this never happened before. I'm gonna have to call Trade Navigator. They've been super reliable all this time, but Anyway, it is what it is. Yeah. All right, so let's focus in. Yeah, looks like the market's selling off even a little bit more. So DDM 45.17 we are under now. Tesla 232.27. And Tesla was at, so at least I can manipulate it this way. So right now it's 232.35. Yeah. So that's currently where we are. That's currently where the price is now, which is higher than the previous low there, the range. So it's above this line. This is the line. This is the line we're keying off of. It looks like it's going to be close, folks. It does look like it's going to be close. Yeah. All right, so we have 9 minutes left. So diamonds we have, we know we're up here. We hit 3 profit targets. Gold, I talked about that earlier. It's about right here. I'm going to be holding that with the 520 cross. Intel, I did get out of that. Nike is moving our way. Currently Nike's up $1.19, hit 2 profit targets. I'll be using the 100-day as my initial stop. SPY is back up into this range. We did buy here, got out here today. We'll be buying that at the end of the day as well. Then UNG was in good shape also. All right, so Tesla, NVIDIA. Oops. NVIDIA above 161. Yeah, so it does look like it's going to be okay there. And DDM, yeah, so we'll just have to wait here. Oh, does it happen on a regular basis on stock charts? Yeah, that's not good. Yeah, Trade Navigator has been very, very stable. I thought when it went out that I just lost my regular internet connection, but that wasn't the case. So the Dow's still up 232, Nasdaq's up 94, and the SPY's up 25. So we're watching DDM, NVIDIA, and Tesla. AT&T was looking good as well, but I can't really get the scope of it right now. So like I just said, Tesla is here. See how we've come down, we've gone below this previous low. We've rejected it, we've come back up. That's a positive. But what's also positive is that we have this bullish divergence, meaning this move down here did not have the momentum as this first move down. And you know, Dr. Alexander, this is his favorite setup. He thinks it's the strongest setup in all of technical analysis, and I don't disagree, it is strong, but the problem is there's only certain times of the year where these double bottoms and divergences happen. So you need some tools for other times of the year where they're doing something different, like breakouts, fractals, moving average crossovers, V1s, V2s, all the stuff that I teach. All right. So Tesla, I will be taking a half position if we close above 231.13. NVIDIA, I will be taking a half position as long as we close above 161.20. And we are now 162.29, so we look fine there. And then DDM above 45.17, so that might be possible. Hey, the good thing is we're up today because this technical issue with a big down day, that would have been a 1-2 punch, right? So at least we're up on the day. We have 4 minutes to go. I'm going to go ahead buy my SPY trade that I do at the end of the day. So I'm going to go ahead and buy that now.
Order filled.
All right.
Order partially filled.
All right, we got that.
Order filled.
It does look like NVIDIA is going to be fine, so I am going to go ahead and buy my half position right now in NVIDIA.
Order partially filled. Order filled. Order partially filled. Order filled.
All right.
Order filled.
Okay. Now back to Tesla. That looks fine. So I'm going to go ahead and buy my half position in Tesla. I trade and manage several accounts, so
Order partially filled.
to rinse and repeat here. All right, so
order partially filled.
All right.
Order filled.
All right, so we've got NVIDIA, we've got Tesla, bought the SPY, phased out of diamonds, phased out of Nike, phased out of UNG. Now the only thing that I'm going to have to be watching here closely is the DDM. And the DDM is 45.17. Right now it looks like we're underneath it. So it does not look like we will be buying that. Let's see, what do we have time-wise here? So we have about 20 seconds. All right, we have 20 seconds, and definitely does not look like it's going to close above 45.17, so that will not, let's see.
Order cancelled.
Yeah. So that's the show. Okay. All right. Well, we did have a nice profitable day today. I am definitely grateful for that. Oh, you want to ask my opinion on AYX? Yeah. Well, maybe we can do it tomorrow,
Order cancelled.
David, because as is, I can see what it's doing right now, but I can't see what it's doing, or yesterday, but I cannot see what it's doing today. How many units of SPY do you buy each day? I buy 10% of my account. So, let's just say you had a $10,000 account, total account. I would buy a 10% position of that. So 10% of a 10,000 is 1,000. And then I would buy $1,000 of SPY each day. So I do a consistent 10% position size, regardless if you have $1 million in your account or you have $10,000 in your account. So a steady standard 10% position size. And most of the time with all my other position sizes, I also do 10%, but sometimes I'll do 5% if it's underneath the 200-day moving average. Hey, I guess I do want to remind everybody that I do offer private one-on-one coaching sessions in the evening time via Skype. And just to let you know what that's about, generally if someone's interested, they email me. I like to have a conversation with them, a phone conversation or over Skype, just to get an idea of, where they're at, how long they've been trading, just some specifics of your goals. And, if after listening to that, if I feel like I can offer something, then we would set up some kind of lessons. It's a la carte, it's by the hour. And, but I have had very good success with my clients. So if that's of interest to you, my hourly rates and my contact information's in the description of this video. So, okay, there's my little plug. Now, does anyone else have any other questions that I could answer without charts? Well, actually, I have some charts I can show, but is there anything else I can answer for anyone today? Okay. Well, again, I apologize, everyone, today. This was a real bummer. I had some cool things I wanted to show and teach, but hopefully we'll not have this problem tomorrow. I sure hope, right? So... okay, well, listen, thank you everybody for coming by today. I do appreciate it. Go out and do something nice for somebody today. Just a smile or a wave or a hi or a hold the door open. Might make difference in their life and make you feel good too. Plus it's free, right? So, thanks again, everybody. I'm going to run the disclaimer on the way out. And if you're available tomorrow, please join us. It's the last hour of the market. So have a good day. Take care, everybody.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.